Okay, so first of all, welcome to the review class, and thank you very much for joining me today. I know it's something that we like to do on a Friday afternoon from 3 to 5. So what I'm going to do is I'm going to try to get through these 4 questions. Okay, so we're going to actually go through them really slowly. I want to make sure that we understand the concept extremely well. So let's start with the first question. So this company, they make basketballs. The ball sells for $25, so that's usually the selling price. And right now, they make it in a small plant that relies heavily on direct labor. The variable cost is $15. And last year, the company sold 30,000. So this is actual number sold. And the fixed cost is 210. So the first part is asking us is to compute the contribution margin ratio, the break-even point, in number of balls, the DOL, all based on last year's sales. Okay? So what I've done is I've prepared for you all the template. Can you guys see this properly? Okay, so now we need to first calculate the break-even, the contribution margin ratio, right? So we've got sales price, $25. This is per unit. We've got variable cost, $15. Contribution margin, $10. So normally when we're dealing with contribution margin, you can actually deal with it from a per unit basis or as a percentage of sales. So as a percentage of sales, variable cost is going to be 60% and contribution margin is 40%. It's 10 divided by 25. So when we're dealing with break even, we're going to take fixed cost divided by unit contribution margin. The fixed cost is given to us. The per unit contribution margin is 10, and this gives me 21,000 balls. So we need to sell 21,000 balls to break even. Now we can also calculate break even in terms of dollars. So this is number of units. We can also do break even based on dollar amount. And it's easy, right? We can certainly take 21,000 and multiply that by the sales price. But we can actually do that too by reformulating the formula by taking fixed cost divided by contribution margin percent. So it's 210 divided by 40%. Gives me 525,000 balls, right? Or dollars. Now if we divide this by $25 per unit, it gets us to 21,000 balls, which is exactly the same as what we just did. So there are multiple ways to get at. There's not one right or wrong or better answer. It's just a matter of what is your preference or what information is given to you. So sometimes they don't give you the per unit, they give you the percentage. Or they'll sometimes give you variable cost as a percentage of sales. If they give that, that means the contribution margin must be 1 minus the variable cost or variable percentage. So I just need you guys to think about perhaps a different way of providing the information and then getting to the same conclusion. So they asked us for break even, contribution margin ratio, done, break even, done. Now DOL is contribution margin divided by operating profit. And again, in the lecture notes, I've shown you several calculations to get to DOL. So make sure you know the difference. Now, a lot of you sent me emails saying, can I have a negative DOL? Is that possible? Is it possible? I mean, could operating income be negative? Of course, right? Could be negative DOL. Right? Okay. Now, obviously, if it's negative DOL, it means that the margin of safety, we're operating at below break even, right, at that point, isn't it? So it does make sense. Okay? So contribution margin, okay, contribution margin is 10. How many units did we actually sell this year? We're told in the question we sold 30,000, right? And the operating profit is going to be 300,000, which is the contribution margin, minus the fixed cost. So that gives me 90,000. So it's DOL is 300,000 divided by 90,000 to gives me 3.333. That's the DOL. So I wanted to highlight that DOL. This is the DOL calculation piece. Okay? Now, let's look at the second part of the question. It says, due to the increase in labor rates, again, this is similar to what we did in Chapter 3, isn't it? That whole sensitivity analysis, right? So due to the increase in rates, the company estimated that variable costs will increase by $3 per ball. So if we do it exactly the same way as above, selling price did not change, right? It still remains constant at $25. Okay? But variable costs in this case has changed. And essentially it's going to be 15 plus 3, isn't it? So contribution margin is $7. Now again, I like to do it on percentage as well. So obviously 25 of 25 is 100%. And then 18 from 25 is 72%. So that means that this is 28%. Now they're asking us, what will the new contribution margin ratio? Got it. And what is the break even in number of balls? So the break even is 210,000 because fixed cost is fixed, divided by $7, which is the per unit contribution, is 30,000 balls. So now we went from 21,000 to 30,000 if we just change the variable cost. Okay? So the key here is knowing what's variable, what's fixed. And we've had numerous conversations. You can watch that in Web Option, but we've had it actually in almost every class about the struggles we all had with Wiley on variable versus fixed. Needless to say, if I was to ask you for your judgment on what is variable, what is fixed, we're going to make sure that there's sufficient information in the question that will trigger what is variable, what is fixed. So please read and don't assume, and do not please assume that utilities are fixed. And I'm not saying utilities will be on the question, but just don't memorize, okay? Now, refer to data number 2. It says above, if the expected change in variable was to take place, how many balls will have to be sold next year to have the same operating income? So what was the profit that we calculated? It was 90,000, wasn't it? So the break even, or it's not really break even, it's actually number of units that we need to sell. So this is the targeted units. Is going to be the fixed cost plus the target profit, which in this case is 90, divided by $7 per ball, That gives us 42,857. Okay, so let's summarize. It says, I want to just summarize in requirement number 2 versus requirement number 3. The contribution margin percentage in requirement number 2 is, or actually requirement number 1 is 40%, right? And requirement number 2 is 28%. The break even is 21, so this is really 1 and 2, 21,000 balls as opposed to 30,000 balls. And if we want profit to equals 90,000, then we need to sell, so obviously we sold 30 because that was the actual results, and now we're going to need to sell 42,857, increase of 12,840, it's 57, isn't it? Balls. Okay? So it's good to kind of get that perspective that essentially we could get to the same profit, right? So we could probably lose our profit of 90 by just changing how we're going to produce it, the variable cost. Let's look at number 3. Number 3 says, go back to the original data. The president feels that the company must raise the selling price of the balls. If Sato wants to maintain the same contribution margin ratio last year, what selling price must be charged next year to cover the increased labor cost? So we need to do an equation that says let X equals the sales price. And we know that variable cost is 60% of S. Okay, so that's S, sorry. Right? So we know that's the relationship. Contribution margin is 40% of S. So we know that V equals 0.6 of S. Variable is 18. Okay, so 0.60 of S, S equals $30. So we need to increase the price from $25 to $30. So if variable cost increased by $3, sales price increased by $5. Now we know that variable cost is 60%, so we know we can just figure that out, right? Take the 3 divided by 0.6 to get you to the 5. That would be the incremental increase. So that's the short about way to do that, right? So that you can certainly apply that logic. That's why I wanted to do this one, because the percentage, the contribution margin percentage is really important. And knowing the relationship between that and variable cost is important. So there's going to be some what-if scenarios. Absolutely. What if we do this? What if we do that? What if we change? So you have to make sure that if a question like that ever comes up, you got to get the first part right. You've got to get to make sure that the contribution margin percentage is right, the ratio is right, the break-even is right, because everything else follows from there. Number 5 says, go back to the original data again. The company is discussing the purchasing a new automated machine. The new machine would slash variable cost by 40%. So the new machine, variable cost decreased by 40%. Okay? And it says, but it would cost the fixed cost to double. So new fixed cost is 2 times, right? Old. If the new machine is purchased, what would be the company's new contribution margin ratio and break even in balls? So sales price is 25. Variable costs, we know it's going to be 60% of the old variable costs, which is $9. So new contribution margin is going to be 16. So again, unit, percent. This is 100%. This is, in this case, this is 9 divided by 25 is 36%. Thank you. And 64%. You know I'm really good at math, right? Okay. Number of units to break even is now 2 times 210. Because now, remember, we're going to double our fixed cost. Divided by 16. And that gives us 26,250 balls. Number 6 says refer. Now, the part that I want to just tie in to you with you guys is that because we haven't done chapter 12 yet, chapter 12 is investments, capital investments, then what naturally would fall into this discussion is, remember they want to buy a new machine? So naturally, there'll be a tie-in to chapter 12, which perhaps gets into more of the decision making on whether the machine, the purchase of the machine is worth, right, is going to provide a positive contribution. So we're going to need to know the cost of that new machine and some other assumptions. So just look for that, look forward to that. And by the way, chapter 12 is actually next week's material. So it's not as far away as you think it is. So there's a great tie-in to this part here when we have the equipment decision, the capital budgeting decision. It's actually not next week, it's the week after. But Monday. Okay? Now, let's look at number 6. If the new machine is purchased, how many balls will have to be sold next year to earn the same operating profit? So let's do part A first. So number of units sold equals the fixed cost we know is 420,000 plus the profit of 90. Remember, it's operating profit, not net profit, right? Divided by 16, because that was the contribution margin that we had there, right? 16. Then this gives us 31,875 balls, right? So therefore, company must increase sales by 31,875 minus 30. That 30 came from number 2. Or 1875 balls to earn a profit of 90. Part B says, assume that the machine is purchased and next year the company manufactures and sells 30,000 balls. Compute the DOL. So DOL, now notice there's no margin of safety here, so I could certainly add margin of safety to this analysis, right? And margin of safety is actual minus break even. And margin of safety percentage is actual minus break even divided by actual. So contribution margin is 16 times 30,000 balls divided by the operating profit in this case would be 480 contribution margin minus 420 fixed cost. Gives me 480 divided by 60, and now my DOL is 8. That makes sense because the DOL is a function of what? Fixed cost. The higher the fixed cost, the higher DOL, right? The harder DOL would be. In part C, it says determine the unit sales volume at which Sato would be indifferent. So this is called the point of indifference. This is called the point of indifference. So when I say to you calculate the point of indifference, this is what I mean. Determine the annual unit volume in which Sato will be indifferent between the old or the new machine, what the current status is or the new machine. If the demand exceeds, which machine would we use? So is sales relevant in this analysis? The answer is no, right? So sales information is not going to be relevant in this case because the new and the old machine, the sale price is not going to matter. It's going to be the same irrespective of whether we produce the balls from the old or the new machine. What's relevant is going to be variable and fixed. So from the new, what is our cost function? It's going to be 9x plus 420 equals the old 15x plus 210. And now we're going to solve for x. It's 210. So we're going to move the 210 on this side. We're going to move the 9 on the other side. Divided by 6. So the question is, actual sales is greater than the 35,000 units. Which machine should we go with, the current or the old? The old or the new? Which has the lowest variable rate? The new one. Once you reach that threshold of points of indifference, what you're going to go after is the contribution margin, the one that gives you the highest contribution margin. Sales are going to be the same, so really what you're after is the lowest variable cost. So in this case, we would like the new. If actual sales is less than 35,000 units, then we want the old machine, depending on expectation. Okay? So make sure you understand the learning key here is got to know your equation, contribution margin, know your DOL, know your margin of safety, know the difference between variable and fixed. We've had a lot of conversation there. So it would be probably prudent to go back to some of those questions that allowed you to your judgment on splitting fixed versus variable. Okay? And it may also be prudent to know contribution margin format. Okay? So in summary, contribution margin income statement versus gross profit income statement. You have to know that. Okay? Break even, MOS, DOL. Right? What else did we learn? Point of indifference. Sensitivity analysis, right? We increase variable costs, we decrease fixed costs. What's the impact? Very similar to the lecture notes, right? Okay. Next. Next is ABC. Yay, ABC. Okay. Any question on question 1 before I move on to question 2? Okay, let's look at this question. This question's actually not that difficult, but it is challenging to kind of get your head around the facts. Okay? Comtech makes two types of mini computers. So they make only two things, CT100, CT200, and they apply overhead based on direct labor hours. So what this is the traditional method of allocating MOH. And this is the information that follows. So we don't have, that question mark means we don't know how much it's applied. So that's something you have to calculate, right? So they gave us volumes, they gave us materials, they gave us labor, $15. Okay, so by virtue of the fact that we are given that the labor charge per unit is $15 an hour, and we're charging $45 for CT100, that tells you that to make CT100 is 3 hours. Okay? And similarly, if you take 60 divided by 15, that means that it must have taken you 4 hours to make CT200. Now, that's going to be relevant because you'll see in a minute that we're going to have to figure out, right? Because remember, traditional is based on direct labor hours. So you need to know how many direct labor hours there are. Yes, sir?
Is it just the 3 hours before that per unit cost?
Correct. These are it says the information about the company's product is as follows. This is the volume, this is the direct per unit, this is the direct labor per unit. So the direct labor cost is $45, and we charge out $15 per hour, then that means it must have taken us 3 hours to make CT100. So you needed to make this connection. If you didn't make this connection, you'd be stuck. Why? Let me show you. It says Comtech's overhead is $710. So this is the total overhead. And there are 3 activities. Okay? Order processing, 120. So I'm going to put down the amount here, right? 120. Machine processing, 500. And product inspection, 90. If you add all this, you get 5, 6, right? 5, 6, 7, 10. So that's the 710 that they're referring to here. So really, we're only dealing with ABC on the MOH level, manufacturing overhead level. But remember, ABC, we could allocate period costs too to the product, right? 'Cause that's part of the uniqueness about ABC from traditional costing. It's traditional, we only really looked at and worried about the budgeted MOH rate, right, to allocate to each product. But with ABC, it could potentially allow us to allocate not just MOH, but also selling and admin based on how much each product consumes that particular activity. But in this question, it's only focusing on the MOH so that we can make a comparison between traditional and ABC. So now they're saying that that's how much it is. It says the activities are driven by the number of orders processed, machine hours worked, and inspection. Now, you're going to make the connection. So this is pretty obvious, right? So you know that for the first one, order processing 120, you know that the driver is going to be order processed. When you see the word machine processing, you know it's machine hours. So you're going to be exposed to, by looking at the Wiley, the textbook class discussion, and the mock exercises, you're going to see that there's a similar pattern of activity and activity driver. So if you kind of follow that, I usually don't stray from those examples. But you need to make that connection, right? Now, it says here machine hours. Now it says the management is very concerned about declining profit. And despite a healthy increase in sales volume, the decrease in income is especially puzzling because the companies recently undertook a massive plant renovation during which new highly automated machinery was installed. The machine was expected to produce significant operating efficiencies. So now they're asking us, the first one says, assuming they use direct labor to apply overhead, Okay? Compute the unit manufacturing cost of C10 CT100. Now, the thing that you need to also remember is we're going to use, let's use traditional first, right? Because that's what they're asking us to do. Using direct labor hours means that they're asking us for traditional method, right? So let's do that. So under traditional method, we're going to calculate, first we need to calculate the MOH rate. So how do we do that? Well, what's the total MOH? 710. Now, even if I didn't give you, right, again, you have to assume that those are the only three, sorry. You have to assume that these are the only three that makes up the 710. So even if I didn't give you this, I didn't say the total overhead is 710, right? But I've given you a whole bunch of information. You can make the deduction, the connection, that the sum of these three must be the total overhead. Okay? Because using traditional or ABC is not going to change the total overhead. It's just going to change the allocation. So in this case, it's going to be 710 divided by, now here's the connection. You need to know the number of labor hours. So how do I determine the number of labor hours? I know it takes 3 hours to make C10, and I made 2,500. So now I can figure out the total labor hours by multiplying 3 times 2,500 plus 4 times 3,125. That was what students got stuck. Now, you know, it wasn't that difficult to get unstuck because you would have to find the direct labor hours because you know that's the driver. And to look for that number, you would have figured out, okay, how do I get that number? I only have number of units. Then you would have made a next logical connection that says, I see that it takes this many hours to do one. So students were stuck, but they got themselves unstuck fairly quickly on that question. So in this case, I'm going to just do this math here. So I'm going to have 3 times 2,500 plus 4 times 3,125 gives me 20,000 hours. So I just wanted to do that quick calculation in the marginal notes. So now I'm going to do the traditional method by dividing this by 20,000 hours to give me 3,550. Okay? Now, so direct material is $30, and this is $45. This is given to us. Direct labor, $45 and $60. And MOH, we know it's going to be 3 hours times 3,550. And this one is 4 hours times 3,550 gives me 142. Now, you've seen other questions where this would be a batch, right? So you see that we may be able to calculate 100 of CT100 or 300 of this, but make sure when we get the total cost, you divide by the number of units. Because remember, I'm asking cost per unit. Okay? Now, the next part of the question is asking us ABC. Assuming we're going to use activity-based costing, compute the unit manufacturing overhead for CT100 and CT200. Okay? Now, first of all, let me ask you guys a question. Going back to the cost hierarchy, because that's our favorite second judgmental topic now, right? Requires judgment. When we're looking at order processing, what kind of cost hierarchy is that? Unit or batch or product sustaining? Where's our favorite product sustaining guy? Couldn't make it today. Probably trying to figure out the difference. Which one is this one? How many of you think it's unit or output? How many thinks it's batch? Interesting. Okay, so let's analyze this for a minute, okay? Orders processed. Now you got to assume that there's too many computers. We make this many and this many, right? You'll notice that the number of orders that we process is much less than the actual quantity. So that's going to be one hint that says perhaps it's not output based or unit based. So that's why I tend to incline to be batch, because when U of T places an order for CT100, CT200, that's one order, and it could be multiple computers in that one order. So you could think about it from that logical perspective that, we're not dealing with one-off consumers, right? If that was the case, we would see that there's quite a huge close relationship to that number of units if it's a unit base. So I think this is more batch. Does that make sense? Now, what about the next one, machine processing? That would be more unit, right? Because every computer needs to be processed. So this would be unit. What about the third one, inspection hours, product inspection? Okay, that's probably batch, right? Okay, so again, just knowing the difference between those, and there are two others, product, right? And remember, the difference here is product sustaining, right? Sustainability is all about designing the new generation of these computers. So any activity that results from the designing or the research or the development of the new product would be the other category. And the fourth category would be anything that relates to the facility, the actual running of the operation, the warehouse, the production. Okay? So now let's do the activity-based costing. So the first thing we need to do is we need to calculate the cost of the activity. So first one is order, process. I'll just go order P. That's okay with everybody. Machine, P, processing, and inspection. The cost is 120, 500,000, and 90,000. The activity. Now, how do I determine the activity? If I add these two, that will give me total activity. So that one there is 600. Now, now this one obviously is 15,000 inspection. How do I know how many machine hours? Yes, sir. Correct. So this one is going to be 9.2 times 2,500 plus 3125 times 8.64. So 50,000 hours. So that's going to be part of the, right? Again, students will get stuck, and you will quickly get unstuck by realizing I need to know total machine hours. So somewhere in a question, again, if you get something, kind of odd meaning different, right, from what you've seen. It's just a matter of just thinking about it, problem solve it, and see whether it makes sense. And normally students can get unstuck fairly quickly if they think about it in a very logical way. Okay, so let's do that. So this would be 600 orders. Now, I want you to think about this. What if I gave you the per unit cost of each activity? So I said something like the previous accountant or the controller before he left for vacation calculated the cost per activity, right? And you need to, and then you know what these are. Could you not figure these ones out? And if you can figure the total cost, could you figure out the traditional costing method that way? Right? So the question could be that I didn't give you the total cost per activity, I didn't give you a total manufacturing overhead, but I was able to give you the rate, and somehow you're able to figure out the number of total activities. Then by virtue of knowing these two, you can figure out what this is. And knowing what each cost of the activity, you can figure out the total MOH that you can use to calculate your traditional budgeted manufacturing overhead. So it's a little bit of a backwards thinking. So again, the question could start with what is activity-based costing, calculate that first, and then do the traditional. This question was the other way around. We did the traditional first, and then we changed it to the MOH, or to the activity-based costing. Okay? So again, just a food for thought. Think about it from that perspective. So you've got how many orders processed for CT100? 350 for the entire 2,500 units. Machine processing, we're told it was 9.2 times 2,500. We already did that math actually. Times $10 to give me 230,000. Product inspection. There were 4,000 inspections. The total is 324 and 386. But remember, we need to remember that if we're asked for a per unit, we need to divide this by the number of units. So now that we know what this is, we're just going to add my direct material, direct labor, and MOH Now it says that they want to do calculate the selling price if they want to have a 50% markup. So how do we calculate a 50% markup? Cost, add to it a markup, and just 50% of cost would be would be 50% of this, right? To give us selling price. Now, if I ask you what is the contribution, what is the gross profit margin, it would be take 386. It would be 102.30 divided by 306, right? Okay, so that's simple math there, right? Okay, now a couple of things I want to highlight for you. How do we calculate prime cost? If I was to say to you, determine the prime cost. What is prime cost again? So this would be prime, right? What if I said to you, determine conversion cost? Right, this is conversion, C. Now what if I did this? What if I gave you total prime, total conversion per unit? So let's say instead of giving you direct material, direct labor, I'm just throwing it out there. I'm throwing an idea, an example. If I gave you prime cost per unit and I gave you conversion cost per unit, not direct material, direct labor, like the traditional question in number 2, you can figure out MOH, couldn't you? Right? We did, didn't we, over here? Didn't we figure out MOH somehow? Right? So there's got to be somewhere in the question that says, I know what MOH is. Or there's got to be a way to calculate MOH. If you know how to do that, then you can figure out what the direct labor is by taking that MOH minus the conversion cost, right? Once you have direct labor, you can subtract that from prime cost to give you direct material. So there's a way for you to bring that back down to the level of terminology and data that you have seen in multiple questions, both in lecture and in mock, right? So I need you guys to kind of think about it. Again, need to figure out how to get unstuck when you're given a question that looks quite different. Because remember, part of BO3, part of the challenge of BO3 is the questions are all going to be different from what you've seen. And it's natural because there's so many different business transactions, right? Financial accounting, it's almost the same set of entries, right? You know you can predict those entries, the process. With BO3, the challenge is really a new scenario. So again, figure out how to get unstuck, and then you can solve it, right? Okay. So number 3, it says, Comtech's selling price is based heavily on cost. By examining direct labor as an application base, which product is overcosted and which product is undercosted? What does everybody think? So, CT 100, CT 200, right? Under the traditional method, what was the cost? Traditional 181.50, 247. Under ABC, what was it? 204 and 228. So, can we make a conclusion? Yeah, CT 200 is over costed. Okay. And how much? By 1848. Now, I'm asking you, using bullet point, state the benefits and limitations of using ABC. Please don't say this on the exam. See lecture notes. No, you can't do that. You need to list it, right? See lecture notes. You know that I know that you know. You can't do that, right? Just list a few. So there's some talking points in your lecture notes about that. So make sure you have that handy, okay? I'm not saying that's on the exam. I'm just saying that should be good knowledge to have. All right, let's look at the next question, please. So, needless to say, one of the biggest components in Chapter 5 are these journal entries. Right? Did you guys want a break? You don't want a break, do you? No. We're good. We are strong. We are good. All right. So, journal entries is important. And you might need to know journal entries, perhaps, from the point of view of a multiple choice question, right? Because that's naturally where it would be. It could be a short answer question, but you know there are two. You know, one of them, as I told you in class, is activity-based costing. So that's no secret. So take a look at question 2. That should really be good enough to review, or at least your understanding. Okay? Now, for question 3, here's what's given to us. You've got this company. They make antique residential moldings, blah, 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 all these wonderful things. This is on July 1st. Here are the following inventory values as the beginning balance. Then it says the company applied overhead based on machine hours. And for the fiscal year starting July 1st, it was estimated that these are the machine hours, and you're going to incur $99,000 in manufacturing overhead. So right there, under traditional costing, we know that that's going to be $99,000 divided by 45. It's going to give us $2.30 per machine hours. This is the budgeted manufacturing overhead rate. To some extent, they're going to be budgeted anyway, right? Because they're done at the beginning of the year. During the year, the following transactions were made. So these were all the transactions that were completed. Now, what does normal costing mean? Oh, yeah, 2.2. Thank you. The sound of reason. Okay, what's normal costing, everybody? Actual input times, yeah, so budgeted MOH rate, right? That's called normal costing, right? So raw materials, 160. Okay, so why don't I do the journal entries as I talk, right? So the first one is going to be debit raw materials, credit AP or cash. And that one is for $160,000. Next, it says raw materials requisition. Requisition means we've required some raw materials for production. How much? $140,000. 420 of that were chargeable directly to jobs. So we know we need to debit work in progress. So we're going to label that as 1, and this is number 2. Debit work in progress, credit, raw materials inventory. But we're told that 120 is to a job, so this will be work in process jobs. But we need to debit, right, MOH for an extra 20. Okay? Next, what do we have? We have number 3, the cost of employee service were incurred as follows. Okay? So now we're going to probably figure out, right? We need to categorize between product and period cost. So which ones are product? Direct labor, right? So this is direct product. This one's direct. What about indirect labor? That one there is got to go into MOH, right? Because we know that indirect labor cannot be easily traced to a job. It has to be allocated. And what about sales commission? That's a period. And admin, a period, right? So the third entry, we need to debit work in progress for 90. Debit MOH for 60. Debit sales commission for 20. And debit admin salary. Credit salaries payable. Now, in D, it says prepaid insurance during the year, expired during the year, 18,000, 13 of this directly related to factory and the remaining to selling and admin. So that means that if the insurance has expired, it ultimately means that we need to record the consumption of that insurance, and we're going to debit MOH for the ones related to the warehouse, debit insurance expense for the period cost that relates to the admin office, and credit prepaid insurance. Now in E, it says utilities for factory. So we're going to debit MOH, credit accounts payable or cash again, doesn't matter. Then we've got advertising cost of 15. And next, we have depreciation of 25. 20 of that went to MOH. Debit depreciation expense. And credit accumulative depreciation, right? Next, it says manufacturing overhead was applied to the job. They recorded 50,000 machine hours. So when it's applied to the job, what are we doing? We're going to record a debit to work in progress for $2.20 per 50,000 hours. That's what we applied. And this is called normal costing because it's going to be actual usage times budgeted rate. That's 110. And credit MOH. And remember, the credit side to MOH is always the applied, right? Next, goods that had a cost of 310 manufactured according to job cost sheets were completed. So debit finished goods, credit, work in progress. And now we're told that we sold it for $498, goods of $308. So debit, AR, credit sales. And debit COG, credit finished goods for $308. Now, we're going to use T account to book these entries. So let's look at the first one, raw material. Now, chances are you're going to be given journal entries, and you have to pick which one is the right one to describe the transaction. Or you might want to use T accounts to find out missing information too, particularly for multiple choice purposes. So these beginnings were given to us. So we're going to debit 160 for, I don't know, I got inconsistent here. I should have used 1, 2, 3, 4, 5. Anyways, you can see where I got these numbers from. So we should only have 30,000 balance left in direct materials. And for work in progress, we know that we're going to debit, first of all, the 120 from number 2, the 90 from number 3, and the next one is the 110 from above here, right? And we also know that we moved 310 to finished goods. So we should have only 14,000 left in work in progress. So maybe the multiple choice may ask you was, what is the ending balance of work in progress? So I gave you a whole bunch of these scenarios, and you're going to have to figure out using perhaps T account to see where the numbers go to determine what that is. Or if I gave you the ending and the beginning, you have to figure out what got transferred to finished goods. That's the kind of style of multiple choice that goes on. Now, let's do the finished goods. So we know we had 80,000, or 8,000, sorry. And then we know that we moved 310 from work in progress, but we sold for 308 to give us 10,000, right? Now, the MOH account is interesting because we know that the debit is always actual and the credit is applied. So we need to go back to all our journal entries and look for all the actuals. And so for this one, we had 20,000 in 2, 60,000 in entry number 3, 13,000 in entry number 4, number 5, and number 7. So these all fall under actuals, right? Now we know that we allocated 110,000 to the work in progress. If you remember, that's what we did over here, right? 110, which meant that if I was to add this, I actually have an ending balance of $13,000 debit. So we know that $13,000 debit, that means we undercosted. We didn't allocate enough. Now, normally there are two methods to allocate this. One is the direct method to cost of goods sold. So let's pretend that was the case. Cost of goods sold was 308 plus the 13. Now, the other method is, so this is what we're going to do, 13,000 to make this thing go to 0, right? Or the other method is called the prorated method. And the question will be given to you as to which method we're going to use. Are we going to use the prorated method or the alter cost of goods sold. I know the textbook gives you some sort of threshold, but we're going to use, perhaps, I'm going to be much clearer. Okay? So, we need to look at the relative balances of these. So we got work in progress. What's our ending balance in work in progress? It was 14,000. What's the ending balance of finished goods? 10,000. What about the COG? 308. No, because this is the, right? You can't use the 321. You got to use the 308 before the prorate, before the write-off. Then we're going to take this relative value times 13, and then you're good. So it's really not that difficult. It's just a matter of just looking at the ending balances of those. So the entry is going to be debit COG, credit MOH. Okay, I'm not going to do the income statement with you. I think it's fairly obvious, right? Everything that's period cost will be reflected on the income statement. Let's move on to question number 4, please. I'll post the answer, by the way, so you guys can take a look at that, okay? Yes, sir. What is the question?
When you're doing journal entries, to use MOH or regular MOH?
Can we talk about it after? Okay, next question. Question number 4. Our last question. So hang in there, you guys. We're almost done. So this one is, again, using high-low method. Okay, we spent oodles of time on high-low method in both your Wiley and your case, that I thought we would also do one too as well. So we are given the following information for all of these 4 months: direct labor hours and overhead cost. Assume that the overhead cost above consists of utilities. So these numbers is made up of utilities, supervisor salaries, depreciation, and maintenance. But we are given the October. So this number, October, is actually this data here. Now, which one is the independent variable? Labor hours, right? So that would be your X. This would be your Y. So what we're trying to do in the first part of the required, estimate how much of the 483, that's December. Okay, overhead cost in December was maintenance cost, sorry. That's what they want us to know. They want us to know how much of this is maintenance cost. Now we're told that there's certain things like variable and fixed. Okay? So, this question is actually a pretty good question. So we're going to start with the total hours of 80, right? Yes, sir.
Is that here that you said machine hours here? I mean, in this graph. But if we're here, this is labor hours. You see that 80?
Yeah, no, you know what? This should be machine hours. Thank you for pointing that out. Yeah, this should be machine hours. Okay, thank you. Actually, yeah, it's machine hours, not labor hours. Okay. All right. The total overhead is 340, 400, right? Now, they're asking us for the December. So they're going to put the 140,000 machine hours. So let's figure out, we're told that the utilities is variable, 104. Now, I didn't have to tell you that, right? Because you could have figured that out by the following data. Now, there's no way you would have figured this out on this question, but there could have been a different way of asking this question. I could have given you a couple more, right, just to kind of get the point about which one is variable, which one's fixed. But we're told utilities is variable. So if utilities are variable, notice how this is variable and Wiley is fixed. Again, you can't make that assumption, right? Now, how do I know what the variable rate is? Well, if I take the 104 divided by 80, what do I get? 1.08, right? 1.3, isn't it? Okay, not 1.08. 1.3 times 80 gives me 104. And if I was to take 1.3 times 140, I get 182. So what I'm going to try to do is subtract to come to that mixed cost. Supervisory salary, we know it's fixed. If we know it's 120, it's got to be 120 here as well. Now, the difference should be maintenance costs. And we're told that's mixed cost. So, we need to come up with variable cost rate is 181,200 minus 116,400 divided by 140 minus 80. 108 per machine hour. So fixed cost is going to be, take the 116,400 minus 108 times 80,000. This is total cost minus variable cost, gives me fixed cost. So maintenance cost okay? Now, if I was to ask you the total cost function, then that would be the third question, right? Express the company's overall, enter A equals A plus B. So now we can do that. So maintenance cost was the only mixed cost. We know variable cost is, or utilities is variable, and salaries is fixed. So y equals 150 plus 2.38x. Okay, then I've got what total cost overhead would you expect to be incurred in activity levels of 90,000 hours? So that's easy, right? Y equals 150 plus 2.38 times 90,000 hours gives you y equals 364,200. Now, you notice that the template that I gave you had questions 5 and 6. I wasn't going to do them tonight for the review because I wanted to give you guys some time to kind of digest this, but I will be posting question 5 and 6. Question 5 is going to be another, listen up, another question similar to question 1, which is all about variable, break-even, MOS, DOL, and question 6 is all about activity-based costing. So those are the 2 extra questions for practice again. And of course, it's all for tomorrow. At least our exam's at 1. Right? Do not pull an all-nighter. It's not going to help. Okay? Thank you, everybody. Have a great evening.